All right, guys. So today is the 26th of July. It's another Sunday scan. It is 95 degrees out, so I had to shut off the AC so it was not making noise when I did this. So it's going to be probably dropping a degree every minute that I do this. So hopefully I can make it as short as possible. I did break a promise, but I am working on it. I said I was going to do the Q&A, but you guys probably saw the market this week. You probably saw what happened. You probably saw ABUS. So some things take a backseat, especially when they are free. I have taken all the questions, I put them together, I'm working on it, and I will do what I said. But at some point, there is a balance, there is life that takes over, and once again, it's a Sunday. It's my kind of chill time with the family, but I've got to do this for 20, 30 minutes because that's just what I do. So please accept my apologies for not getting the Q&A session done that I promised, but it is coming and will come, and I will keep on doing it when and if I can. So first and foremost, B Newell 13. You've got a free t-shirt, so email me, webmaster@investorsunderground.com, and we'll ship that out to you. Like I said, we've got it streamlined now, so every time somebody wins, it's out the door the next day. So this week was crazy. I mean, it was one of the craziest, laundry's done. It was one of the craziest weeks that I've ever encountered. I had a lot of slippage. Last week, like I talked about, I had a lot of slippage of, just big P&L swings and things like that. Some things that I could have improved on, some things that, I did pretty well. I just maybe could have sized more. And we don't play the shoulda, coulda, woulda game in this business, obviously, but there is, every day there's something to learn, right? And every day you can kind of go back and look at things and, what could I have done better? And that's what you should be doing. You shouldn't be frustrated that you only made X. You shouldn't be frustrated that, you could have made more, but you should be obsessed with the process, obsessed with it. And when you have a good process, when you have a good strategy, and you are just focused on that, everything else happens, right? If you are focused on P&L, you're going to start going backwards. You're going to go the wrong way. It's not going to work. That's why everybody, they post big P&Ls, and, it's great. It attracts a lot of people. I probably could have 10,000 subscribers if I was posting P&Ls. But that's not who I want to attract. I want to attract people that like the first 10 minutes, 15 minutes of this Sunday scan, that talk strategy, talk psychological, aspects of things, and is going to actually make you a better trader than just posting a P&L and, holding that, dangling that carrot like most, and, trying to get you in. So I do not want that subscriber, and that's why we don't do it. So with that said, focusing on that strategy, I mean, Friday is exactly what we prepare for, exactly what we train for. It's just like a marathon, triathlon, PMC, cycling and things like that. If you get on a bike and you try to go 200 miles, you're probably going to get hurt. If you try to run a marathon and haven't trained for it, you're probably going to get hurt. But if you start to build up and build up and build up, and when it's game time, when it's that marathon day, when it's that day, you're prepared. You're ready to go. And it's worth that risk to take to potentially get that reward. So ABUS was exactly that. Usually I'm a great multitasker. Usually I can watch the baby on the side, and I just was like, Laura, come get him. I cannot be not focused right now. And so ABUS, I could have traded it better. I could have covered a lot more pre-market and then resized even in, more at open. But high conviction trade, wrote it the night before, know what you own. For anybody that should have put an antenna up and kind of start investigating the fundamental side of things, start to investigate, all right, what key levels are going to be, the levels that I need to focus on. And also understanding that it was easy to borrow. Understand that anybody and everybody could short it. That is an element that has to be put into your strategy. Because if everybody can short it, no offense, but then you've got, mom and pop shorting it. They have no idea what they're even doing, right? Typically, in my opinion, if you have to pay for the borrow on some of these things, or it's a very tight borrow, or it's hard to borrow, at least you have a little bit more robust traders, maybe, that might understand a little bit more than just hitting the short button, right? And, oh, it's up, so it must, maybe it's going to go down. So anyway, that was A+ setup, just literally what we trained for every single day. And it came to a head, and it was there, and, I took it. Could have traded it better? Absolutely. I sized into about 20% or so pre-market, and I didn't get the covers that I wanted. I was trying to be patient. I thought I potentially had it. But with that said, that doesn't mean that I just keep on adding and adding and adding and adding without seeing, what I need to see. I need to see failed follow through momentum. I need to see that big exchange of shares. I need to see that transition of basically wealth, right, happen in the market. So that happened, and just like I wrote in the room, that's when I got short. And my goals were 580s for the first one and then 480s for the rest of the cover. And I did not have one cover until it went red on the day and hit the first target. So that was great. That's what we prepared for. And just like I say, next. It doesn't matter. Monday, if I come in, walking, thinking that, like I own the place, guess what? I'm going to be out of money. So tomorrow is a new day, a fresh day. If there is an A+ opportunity that is, equivalent, which I don't see one setting up right now, but if there was, then yes, it's worth the risk. But if there isn't, hands off, relax, wait for the trade to come. So anyway, that's really the biggest thing. We always talk about marathon type stuff and training for it, and that's exactly what we're doing. But additionally, focus on where you're going to be wrong on the trade. That's another thing that I said. We did an open mic session this week in the middle of the day, and one of the questions ended up going to the conversation about focusing on where you're going to be wrong, right? Not necessarily where you're going to stop, but at what point are you wrong on the trade? At what point does your thesis, prove to be incorrect? At which point should this not go over this level? And if it does, then you're wrong, right? That's kind of the type of trading that you need to be doing right now. It's not, I'm risking 10 cents to make, 30 cents. It's not like that anymore. You've got to think big picture. You got to think, zoning into the move and then be able to take the trade from there. You can't just take AVUS and risk 10 cents or 50 cents, whatever. Especially when you're trading size. I mean, that type of opportunity right there, whether it be 10K, 30K, 100K, or 300,000 shares, there was a $3 opportunity there. No matter what size you are, there was a $3 opportunity that was very high 90 percentile chance of happening, and it did. And so that's where you've got to think about, that's what you've got to, kind of get in there and know when to risk. And if it had held at what key level, where would you have been wrong? That's what's important. Otherwise, let it work. Let the trade work. Additionally, one other topic that I had for this morning or this afternoon is you're limiting yourself if your covers and shorts or longs and exits are in the same candle, right? If you're always scalping and your chart is like this, in, out, in, out, in, out, in, out, you are limiting yourself as a trader. You will not progress as a trader. You will always be a scalper. You will always have limited returns. You cannot exponentially gain with that strategy. You cannot exponentially grow with a strategy that's in, out, in, out, in, out, in, out, in, out. Sure, that's a great way to make $200, $300 consistently per day, but you will not exponentially grow into what you see some of these guys post if that's your goal, but you will not get there if you're always doing this. So think about big picture trade, think about letting the trade work for you, and then take the trade. Think about what trades are sizable. Not every single trade is sizable. NIO, there was 2 days that I felt like the liquidity was there, the volume was there, that I literally could trade any size that I felt comfortable. The next day, and the next day, if I had traded that size, my risk would have been huge. And I probably would have got squeezed out. I probably would have been able to move the market myself with a cover or an exit, whatever it may have been. And there are certain days, right now the liquidity is just insane, right? So you can make decisions that you normally wouldn't on some of these stocks that have lower flow, some of these stocks that are trading 100, 200, 300 million. You can take trades that you normally wouldn't take in any other market, but you cannot forget what you're up against. You cannot forget that, it's a low flow trade. You cannot forget that there's 3 million shares out there, 5 million shares, 8 million shares. If it's trading 200, 300 million shares and it's got 5, 7, 8, 10 million float, or even a little bit more, you still have some very, very high risk if you are not being proactive about covers, or if you're staying in size and start to see what it does, right? We talk about seeing what it does. And, when you do that, Mist is a great example. And in the morning, I had written, I feel like everybody's sized. I feel like everybody's got a high degree of confidence right now. Everybody that used to trade 3,000, 10,000 shares is now, trading 100,000, 200,000 shares. And when you add that up amongst a couple friends, and all of a sudden, there's probably 1 million shares short, 2 million shares short, it starts to get a little uneasy feeling. So always make sure that the trade is continuing to prove to you that you're right. If it starts to rebound and, the thought process, the feedback is still, this thing's going lower, but it's kind of inching up. If Mist was just a situation of denial, right? Comes down, everybody's just crushing it. And then it starts to skip up, it fails to break down, skips up, fails to break down, skips up, fails to break down. The writing was there, but we start to get into I crushed it. I was up $3 per share. I'm not wrong. And then all of a sudden, guess what? It's thin enough that it can swipe up. So, personally, I minimized it. It was a great trade. Don't get me wrong, but at the same time, I definitely minimized that opportunity. And that's because I saw it, but I ignored what it was telling me, right? So that's going to happen. But right now, it's more important than ever to identify that, especially on million, 2 million, 3 million, sub 5 million float. Because something may appear like it's thick and trading, with insane, unlimited liquidity. But when and if they want to turn it on and everybody is sized up, that's when things hit the fan. There's a lot of people making a lot of money right now, and it only takes one trade to take it all the way. So it's not to scare anybody, but you need to always remember that, right? We had a huge run a couple of years ago, and then there was a couple stocks, Dries, KBIO, a few of those. Everybody's killing it. One trade can take your account away. So always make sure that your risk is in check. Make sure that if you are trading abnormal size on a low liquidity, a low float type name, always remember that. It's different with a thick float, 20, 30, 50, 100 million shares. That's different. You still need to have proper risk management, but you're not going to get swiped. I guess you could, it's possible, but you're not going to get swiped for $3, $4 into a circuit halt and get caught, right? And in this day and age, if you've got a couple 100,000 shares and it goes into a couple dollar halt, you're up the creek without a paddle. So, I think that's it for the topics that I wanted to talk about beforehand. As far as this week ahead and what we're looking for, it's gonna be a pre-market broadcast kind of day, and let's see what happens. Mondays are always crazy, right? Everybody's pent up, emotions from the weekend. I haven't been able to trade. I can't wait to, this thing's up 50%. Well, it's not up 200%, so I'm going to chase it. So Mondays are always like a wild card. They set up a lot of names for the rest of the week, and then I feel like scan is very, very important as far as being prepared. But for me, ABUS is going to be a main watch again. Hopefully it comes back up and maybe retest. I know sometimes this doesn't record my my mouse, so I'll just try to draw some lines just so you can see. But ideally, it just kind of comes up and retest some of these levels here. And that's where I'd be reactive, right? I feel like a lot of people potentially are still short, rightly so, but higher the better, and then potential more unwind. I wouldn't want to get too aggressive trying to find the top, because what happens when you do that is you're right, but you second guess yourself, you're oversized, you end up covering, and then it pulls back. And you're out because you kind of pre-exhausted yourself. So anyway, that's going to be one. Twitter is going to be one that I'm going to be watching. I'll be watching versus this VWAP level, which is this blue line here. Higher the better. It's been a good trade for me the last couple days, or Thursday rather. I didn't trade it Friday, but higher the better. If it stops going down, I like a risk versus 37.30s for the potential, rebound. But otherwise, hopefully, has a nice little pullback if the market continues to come in a little bit. It did hit this resistance over here from, I guess, it's, February 2020. So we blasted through it, sat back. So it's possible we get a nice flush out, and then I would expect it to kind of get bought back up. But definitely nice volume Thursday anyway. So I'm thinking that sometimes you get that move on the earnings, and then it kind of consolidates for a day or two, and then it does the real move. So I want to be aware of that maybe Tuesday, Wednesday, and just join that trend. I'm not looking to fight it. NEO, I think will have a 50 cents or a dollar type move. Again, I'm not crazy excited about the main watches. I think that there's going to be plenty of stuff happening come Monday that we're just going to have to make a plan by 8:50 a.m. like I do every day on the mic, and then let's see what happens at 9:30 and so on and so forth. But I do think we're going to have some big action for sure. But NEO, I think, let's see what happens with Tesla. It came back great. I mean, this thing came back really great. So I'd be using 12 as a guide. If I wanted to get long, I'd be using 12 as a guide. If it's under 12, 1190s, look for failed follow through, potential fade. We're starting to see the market pull back a little bit, but I think I just saw somebody tweet something about more, another $1,200 coming. So, that could save things into the end of the year, and we could just be in for more and more craziness. So let's see what happens. Forget if we put E-Man. Yeah, E-Man I did. It's a little bit lower, but I'll do it anyway right now. E-Man was great. Nice early alert on the, it wasn't a PR, but it was a link to, I forget what it was, 30-something million, or I forget exactly what it was. But if they PR it, maybe we wake up and it's, $1.70, $1.80, pushing on $2, something like that. So great trade in the room on Friday. I bought dips. I sold some into the close. As always, if it closes super, super strong, I want to be a seller of at least some so I can replace it lower, ideally. And then if it gaps up, great. So 150, 170, 180, who knows if we get a PR. But that's all very possible. If we don't, then, let's just see how it reacts based off of the kind of support that it put in at about $1.15. NTZ was a nice one. This was, this trades, I think it's dual listed. So a lot of people looked at it, saw it was like a million float, but it wasn't. I think it's like 4.5 or something like that. But I faded it. Very clean move. I think a lot of people ignored it just because they saw a million and didn't want to get in trouble. So higher the better on this, and ideally it pushes back up towards 2, and then maybe backside on 1. Decent volume, 60 million shares, and ideally we have another trade. The thing I liked about ENZ and ENT and a few of these others is I was able to put those on and let them kind of work while I was trading ABUS and things like that. My goal is always to find a few that I don't necessarily need to go crazy size, that, I need to watch every single tick, but I can at least, start in, scale in, and hopefully they do their thing while I'm trading other names. And that's exactly what happened with all of these. ENT was, this is just a sign of the times. Newsletter goes long, pre-market, creates this market that wouldn't otherwise be there. It appears as though there's a lot of demand. The demand is just because there's 4,000, actually about 12,000, because they stream on YouTube too. But, you've got all these people that are chasing, plus it's delayed. It's delayed entries. And so they think that it's, a good thing to chase because they see all this volume. Meanwhile, it's not a natural reaction to the news, right? So all this increased demand appears like it's good, And, then you have this nice fade throughout the day. I covered a little bit early, but goal for me would be potentially a pop up towards 370s, maybe fours if we're lucky. I don't think so, but you can see every single pop was sold into ever since it busted through VWAP. And in a situation like this is a perfect example of making sure that you're not oversized, because if you're oversized, you're probably covering into these, in a little bit of a nervous panic. But great unwind throughout the day. Higher the better. Looking for fade. AUPH, I think they wanted the buyout here, so a lot of pressure on the name from the other day. I'm going to be looking for pops, maybe versus 1420s, 1450s. We are in that type of market where things are starting to unwind. Some things, not all. And it's been a while since we've seen kind of big bids give out. So in a situation like this, it's very possible that this very retail, long, crowded name has a nice fade down to 13s, 12s, something like that. So I'd be looking to potentially lean on any downside action. Other than that, continuation trades, MOGO and Arnet. So far, so good. I bought these both on Thursday. Arnet took off like crazy. It was up about $1.30 per share or so from the, I was dabbling on, it did a huge ramp, came back, nice ABCD type setup. So I was nibbling on the dips, and then it took off. The thing about Arnet is it's also an ABCD setup on the daily chart as well. So I always like when they line up on multiple time frames. But same thing, MOGO, not as clean, but same kind of concept. It had the big day, ramps up, higher low, and then I like risk first the daily VWAP. So if these things stop going up, then I will shave more off. If they continue to go up, then I potentially would keep on scaling it. But so far, so good. And, let's see what happens. Great volume. Arnet volume was almost 60 million as well. It held. Actually, I was expecting maybe to overhold some of it, to be honest, on Friday. And it was surprisingly strong. So, and it's also very thin when it wants to be. So, this is the type that potentially could go 4 to 5 if things start to consolidate. So not every day needs to be green. I'm just looking for wicks to get bought up. We talk about wicks all the time. MIST was another example of just, running people out of money, right? You get too sized up, you ignore what's happening, throughout the day. I had a bunch of PMs. What do you think about this for an unwind? And any time that it's just going sideways, the longer it is sideways, the worse your edge gets, right? It could go either way. It's just who breathes on it harder, right? Does a bidder come in, or does somebody sell? And you really come down to like one candle or two. So they just kind of baited shorts all day. They squeezed them all out, and then that was it. Complete unwind. So they even broke prior day's highs. I mean, it's pretty incredible. You can see that the area is about 820s, that they've been kind of consistently hovering. So if you're trying to get aggressive around that 8 to 840 mark, just understand that your edge is not there. Your edge is when it's away from those levels. So in a situation like this, I feel like it could turn into like a VRNA type situation where it just it squeezed everybody out Friday, and that's it. And it kind of just tapers off. And if that's the case, then it might be untradeable. So it might just fall off my radar. But we'll see. I think one trade out of the open, reactive trade. I'd like to, kind of react to that and see what happens. So if it gaps up and it's around 850, or excuse me, 870s to 9, then I'd probably react to it. A couple others just firing off charts that I like. CYRN, I bought some of this into the close. E-Man, we went over already. Hopefully they have that PR. CHFS, nice. You can see all these wicks getting bought up, took off. So I scooped some of that on Friday as well. But that's it for continuation type trades. We are in an insane market. We just need to see what happens on Monday on the gap ups. I really would suggest go back and rewatch the start of this. it's not, look, I know a lot of people probably lost on ABUS too, being too early, right? It's very easy to be very early. And it's very easy to have A+ conviction because you know too much, right? And, I was pretty ready to go on Thursday. And, I put on a little bit on Thursday night, very, very small, like can't even do the math, maybe 1/40th of where I ended up. And, it just was, I knew I didn't want to get too aggressive too soon. I knew I would not miss it. One thing to think about is the higher these things go, you're not going to miss the unwind. Even if you looked at MIST, after that initial crack was 3 times the move. So you got to think about that. After ABUS had the initial crack was 3 or 4 times the move, right? So you don't have to be first. I like to get in there, but I'm not going to be getting aggressive on the front side because you're going to get ran over. But think about that. Think about not in, out, in, out, in, out, in, out, in, out. If you see charts like that, run. That's not what you want to be doing. That is not a scalable strategy. Because what happens is you do it, and you scale the size of that. And then when you're wrong, you get wiped. And then all that other work gets taken away. So think about what becomes a scalable strategy. Think about a big picture idea. Think about where your edge is. And then think about scaling that, figuring out, fundamental aspects that might help you with your conviction, and go from there. And one other thought, and one other thing, and again, don't be discouraged if you're not killing it, right? But I've got a very good buddy who had his back-to-back best 2 weeks ever, right? And he's talking to me, talking to another trader, and he's like, oh man, if I just did that, I could just do that. Well, it doesn't matter. You're not doing that because you're progressively scaling up as you're going. And sometimes it's easier to take a look back at where you came from, right? When you were the little piker doing $100 and then it turns into 3 and then it turns into 10K weeks, 20K weeks, or whatever it may be, right? Always look back at how far you've come because like I've said, somebody always makes more. And if you continually go and search for, who's making more, you're never going to be satisfied, right? The other thing too is that you are also progressively getting better, right? So if you just like if you jumped in and tried to do a marathon, just jumped in and tried to, ride a bike 200 miles, you're probably going to get hurt, right? So as you progressively build, you're also progressively building your mechanics, your risk management, your emotions that, kind of drive the choices that you make. And you're detaching from what used to impact you, right? So, for example, 50K loss when I was, 10 years ago might take me out and I'm just like in a bad mood. I'm upset. I'm like, why did I do this? It just took away months and months of work. And, it sets you for a loop for a long time. But now that might be a 3-minute swing, right? And that might sound crazy to some, but that's reality. So when you lose $100, you feel a certain way. But as you progressively get better and you're learning as you go, that $1,000 pullback feels like the $100 one did. That 5K hit feels like the $1,000 one did. The 10K hit feels like the 5, and so you're continually building and learning as you go, and that's what it's about. So just understand that you don't want to just jump in. You don't want to do a cannonball right into, sizing up, because it's going to bring out all those emotions, all those mechanics that you haven't built yet, and you're not going to be able to trade it well. You have to, put on the brakes. If you've got it in you, if you've got the drive to get there, then you will. That's what you can't teach. You can teach mechanics, you can teach how to trade, you can teach how to, stop out and things like that, but you've got to have the drive to keep on figuring out a better process, a better way. And last thing, 5 more people for Avidity Fitness. 5 more. We got 5 last week. We've got about 22 to 25 people that have been doing it, which is awesome. Zach is super pumped. 5 more people, and everybody that does 4 classes. It's a Zoom workout right in your own home. If you don't want to have the camera on, you don't have to. But if you do, he'll tell you, correct your form, whatever. But I want 5 more people this week to commit to 4 sessions, and I donate $250 to Traders for a Cause. Okay, so I'd really like you guys to do it because there is such a connection with trading. It's that same drive, that same dedication, that same process, that same commitment that you have to make, and making it part of your daily routine is what trading is all about. The same thing as working out. Make it a routine. Make choices that are going to help you. So I need 5 people this week. And that, I think, is it. For about 30 minutes or so. And I think the temperature has dropped about 15 since I turned off the AC. So it's getting hot in here. But we'll see you tomorrow. Like I said, Friday, awesome. Really happy about the process. Doesn't matter the P&L. I am happy that I executed the way in which that I did. I did find some things that I could have performed better on, and I will work on those, but that's okay. And tomorrow is Monday. It's a fresh day, and we act like we've been there before, like Greg says, right? It is a trading, having a right process, trading well. The P&L is a byproduct of solid process. It's solid, plan, solid risk management, and solid preparation. So think about it like that. Thumbs up on this video. Leave a comment. If you have any questions, reach out. Like I said, I broke the last promise with the Q&A, but this week got crazy again, and I am on it, and I've saved all the questions, and I will go through them, and we'll see you in the room tomorrow.